Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The Biden administration weighs additional curbs on semiconductor equipment and AI memory chips sold to China. It's the latest crackdown on Beijing's tech ambitions. US regulators launch a broad investigation into tech giant Microsoft, looking into everything from cloud computing to AI and cybersecurity ahead of a new administration. Plus, we'll watch French banks as they fell in Wednesday trading. The far-right National Rally says it's not yet decided whether to back a no-confidence motion in the government.
In the meantime, a quick check on these markets. A lot of doom and gloom, Anna and Guy, but you're not really seeing that show up in these markets. Your Stoxx 50 futures higher by 0.6%. The FTSE 100 basically flat. Light volume, light liquidity. It is Thanksgiving holiday in the United States. That's going to affect the trade. When it comes to the currency picture, 105 on euro dollar, 126 on cable. The countdown to the opening trade starts right now.
Thursday morning, good morning. Happy Thanksgiving if you are an American disposition. We are obviously going to see very light trading today. We are going to see the Americans out. That's going to have an impact on markets. Cyber Monday is still to come. But despite that, we need today to talk about what is happening in technology and chips.
Yeah, absolutely. A few different technology themes in play this morning, Guy. And the first one we start with comes from the Biden administration, and a really useful reminder that even though we're talking a lot about President-elect Trump and the impact he is going to have on global geopolitics, on tariffs, well, here's something that the Biden administration has been delivering and can still deliver. This is more curbs on the sale of chips and chip equipment to China. And what's really interesting here is they've been angering some of their own US chip suppliers in making these moves, but they're still pursuing it. And we've seen Japanese chip stocks gain. Their loss is Japan's gain, it would seem.
Yeah, I'm curious how this is going to ripple back effect to them, right? Because we're still talking about an idea that perhaps these new measures are a little bit lighter than what a lot of people had expected. And yet, it's not really being interpreted that way for some of the chip stocks that maybe have had some time to deal with this.
So AMAT is potentially going to be one of the big beneficiaries of this. There was concern that if they were too stringent, that Applied Materials would suffer at the hands of Tokyo Electron and ASML. That doesn't now look like it's going to happen. But nevertheless, it was interesting that Chinese stocks, tech stocks, did take a hit on the back of this, an expectation, maybe a pre-shock of what could still be to come from the Trump administration. If this is what the Biden administration is doing, what will the Trump administration do?
And interesting that there was cooperation between The Hague and Washington on some of this in some places in months gone past, but not so much now. And it does seem as if, well, maybe many governments around the world waiting to see what difference the Trump administration will make and keeping some of their powder dry, perhaps.
And this was part of a sector, by the way. The Biden unwind was a part of the Trump trade, right? A lot of the chip stocks around the world had underperformed in the lead up to the election on this very expectation. It's not the only tech story that we're talking about. We also have an FTC probe, a very wide-ranging FTC probe on Microsoft. It kind of feels like being rushed through Lina Khan, of course, the chair, who's kind of had it out for big tech for quite some time. This is, I should say, a bipartisan issue. They're talking about cybersecurity, AI, cloud computing, and we should talk about some of the other kind of companies they've also targeted. Amazon, Meta, even Uber, their subscription service being targeted. How much of this, to Anna's point, has legs in the new administration remains to be seen, but still a pretty big deal.
If you listen to J.D. Vance, though, you would assume it does have legs. Gail Slater's being recommended potentially to come in and replace Lina Khan. She could be as aggressive when it comes to big tech as maybe Lina Khan has been under the Democrats. And it's going to be really interesting to see actually whether or not you get some continuity here in terms of the aggressive approach that is being taken. And then you have to ask the question, is this just a big tech issue? Are they going after big tech, which has become a Republican kind of story too? Or is this going to be a wider M&A story, a wider kind of regulatory story as well? It feels like it's just big tech right now.
Even in the Trump first administration, there was conflict with big tech, wasn't there? And then you can now focus on some of the more relaxed nature to deregulation under the Republicans and think, well, maybe the Trump administration won't be so tough on these tech businesses. But then there's Elon Musk in the room, and I'm just not sure that you can discount him as a force and his views on where the technology sector goes in the United States. So a lot to understand still about what the new administration will mean for big tech. And in the meantime, we deal, as you say, with this Lina Khan probe. This was an extensive document, pages and pages and pages, and it covers so much. Cloud, software licensing, cyber, AI. I mean, it is to do with bundling, so it is bound to include a lot of parts of their business.
But also, there are the flip side of the argument of this is simply that there are no other players. The barriers of entry, the investment, there aren't any other companies who can kind of put that kind of investment in that Microsoft has.
Isn't that the argument against the fact that they've become so big that they're the only ones that can do it, that you basically block other companies entering the space? That's the argument from the smaller players.
From a consumption point of view, absolutely, 100%. But then from an investment point of view, do the smaller players have the capital to put in to begin with? Let's say all the barriers are cleared. How quickly can you deploy to the R&D that maybe Microsoft, Apple, et cetera,
This will play out over years.
Or do you just fragment it? It may play out over years. It's going to be really interesting to see just what the Biden administration kind of hands over to the Trump administration and how the Trump administration takes that baton. Let's talk about France. You've been talking about it all morning. You've been talking about the relationship between OATs and Greek bonds. That's something that we haven't seen or would have expected. France is... The market is beginning to worry seriously about what is happening here. The French finance minister is going to be on radio, I think, in France in 24 minutes' time. I'm really interested to hear what he has to say on the latest developments. But certainly Barnier is warning of a lot of problems right now, and it's becoming increasingly clear that he's unlikely to get this budget through.
And the National Rally, I think it was the finance minister from the National Rally, the finance spokesperson, saying yesterday the party has not decided. You know, they're just keeping that card close to their chest. They have not decided yet whether they will choose to bring down the government, because that does seem to be in their gift.
It was fascinating that the guests we spoke to in the last hour, I kind of asked, all right, what do you need to close that spread? And he said, well, even if everything works out, it still may not close the spread. You still may not actually see that narrow. So I'm still waiting for someone to say, well, what is the best case scenario here? Even if everything goes through, is France really ever going to come back to those pre-crisis norms?
Do you need to get past 2027? Do you need to get past the presidential election? Do we need to know who's going to be in the Élysée rather than Matignon in order to get some sort of clarity?
This is all a preamble to the presidential election next time around, isn't it? That's what this all feels like. And the decisions that Le Pen's party makes and how they decide to act in this situation is all with a view to the next presidential election. And yesterday, the banking sector paid the price for some of that uncertainty, down 2 to 4%. So not to overstate the moves, but they were quite substantial.
No, but we've seen this playbook before. We know how ultimately it could play out, where you just see some sort of a sovereign crisis and how that ripples into the finance sector. And maybe that's why also everybody's so nervous about banking union and cross-border takeovers, because you have this sovereign link which still exists. And that could be still problematic. Let's talk about what we've got coming up in terms of the Today's Show. Bénédicte Lowe, European equity and derivative strategist for BNP Paribas Markets 360, is going to be joining us. Swetha Ramachabdran, fund manager at Artemis, where she oversees the leading consumer brand strategy. Remy's out with numbers this morning. They are disappointing. The outlook is disappointing. We've got tariffs to talk about. We've got tariffs in China and potentially in the United States, all to focus on with Swetha a little later.
Let's talk about some of the other kind of things that are happening. We should talk about some headlines that are crossing the Bloomberg terminal before we get to what the next 24 hours looks like. We are getting a headline that OPEC Plus is delaying their meeting to December 5th. I believe it was expected on this coming Sunday as well. December, I'm trying to get that date.
It was
December
supposed to be
1st, right?
this Sunday, and it's going to be delayed until the Thursday afterwards.
A couple of days later. Not really seeing that much of a reaction in the oil market off the back of that 72 handle on Brent crude. Let's talk about some of the other things we're going to be watching out for today as well. Of course, it is Thanksgiving. A guy did not bring me a turkey on set. We'll talk about that post-show. But the bond market, the stock market is indeed closed. Futures, however, are trading. At 8 a.m. UK time, though, we are going to get some Spanish CPI. 5 hours later, that full German CPI with some of the regional names reporting at about 9 a.m. UK as well. And then plenty of ECB speak. Villeroy, Knott, Lane, all hitting the wire. OK,
so we'll listen out for the French finance minister speaking, as you flag, Guy, but also some of those ECB speakers. Is that it for Thanksgiving celebrations, then? Did the top of the show mention that all,
I mentioned it,
all we're doing for Chrissy?
Clearly wanted turkey. Can I just say, though, the debate pre-show was whether or not you're allowed to put your Christmas tree up pre-Thanksgiving.
Guy and I have a certain view on this.
I really considered wearing my Christmas shoes on the air, and I was like, maybe stilettos work better with this outfit. But I am wearing Christmas shoes. I'm ready. I'm waiting for you two to get on board.
December, okay? December needs to...
So on Monday, on Monday, we're all wearing Christmas-themed outfits. Got it.
No. What else do we need to know this morning? Moving on swiftly. Direct Line Insurance has rejected a £3.3 billion takeover bid from Aviva, saying it substantially undervalues the business. Aviva now has until December the 25th to announce a firm intention to make an offer or walk away. December the 25th. Yeah, that rings a bell. This according to UK takeover rules. Earlier this year, Direct Line had rejected a similar proposal from the Belgian rival Ageas. Christmas Day seems like an odd day to have a takeover deadline. Bloomberg has learned that Uber is under investigation by the US Federal Trade Commission. The FTC is looking at whether the company violated consumer protection laws with its subscription service. Bloomberg understands the commission is looking at the enrollment and cancellation aspects of the Uber One service, which provides discounts on rides and delivery orders. Uber says it's quick and easy to cancel the service. And Remy Cointreau has lowered its full-year guidance, saying it doesn't expect a recovery in the United States market until the end of this year. The spirits maker now expects organic sales to drop by as much as 18%. Analysts had forecast a drop of 12%. Cognac producers have also been affected by China's temporary anti-dumping measures on EU exports. And this is before we see potential tariffs kicking in the United States. The US has been destocking, and that's still a factor for Remy right now. It's being affected by Chinese tariffs. There is this kind of European double hit, 1-2, that potentially could be coming for the luxury sector.
Yes, but it's really interesting that the tariffs that have been imposed by China, these were anti-dumping tariffs, a kind of, in the words of China at least, appealed at the WTO, but a retaliation for what Europe is doing on the auto sector. The effect of that is described as marginal by Remy, so they're not too worried about that side of things. It's a reminder that it's the US consumer. We're still thinking about the US consumer for this sector, not just what the Chinese consumer is up to, or the Chinese tariff, or the US tariff story. Fiercely promotional environment in the US, and that seems to be what has been weighing to a greater degree than expected on Remy Cointreau.
So we've seen that in Remy Cointreau. We've also seen this come out of Diageo as well. We know those have been one of the main stocks that have been affected with a lot of these conversations. Of course, they don't directly compete with Remy Cointreau, and they'll say some of it, but they are far more exposed on the tariff front when I'm thinking Canadian whiskey or Mexican tequila, for example.
Yeah, north or south of the border, basically. They've just got exposure coming through there. And it's going to be interesting to see whether or not Trump follows the playbook that he followed last time. And spirits is an obvious kind of high-value, low-volume good that is fairly easy, potentially, to target.
And we're going to be having more detail, more focus on this conversation a little bit later on in the programme. So coming up, we'll be speaking exclusively, firstly, with the Lebanese Economy and Trade Minister. This is the ceasefire between Israel and Hezbollah holds. We'll get his perspective. Plus, Europe drills its citizens for a new Cold War. We will discuss how countries, including Finland and Sweden, are preparing for war and conflict following Russia's invasion of Ukraine. Up next, we will be joined by Klaus Baader, Global Chief Economist at Société Générale. If you want to get involved in any of these conversations this morning, then please do get in touch. IB plus BBTV Go. That is the function to use on your Bloomberg terminal. This is Bloomberg.
Bit of a non-event today. Yes, futures are higher. Great, fantastic. They're only up by a little bit, certainly when it comes to some markets, more for others. How useful is today's session going to be without the United States? I think that is a more open question. Maybe we'll start to get a better idea. I think probably Monday of what real price action looks like. Tech sold off yesterday. In the States, that doesn't really have a meaningful impact over here either. Anyway, that's the position we find ourselves going in to today's session on equities. I actually think the bond market is going to be a much more useful and interesting indicator right now. So what we've seen over the last few days is a real focus on French assets. And the French bond market seems to have stabilised a little bit, but it is the widest level since the European sovereign debt crisis versus Germany. Government viability, all kinds of issues, front and centre. Valerie's here with more details.
Look, guys, not just those French bonds that are sagging. It's also the equity market. It's underperforming the broader European benchmarks. This is the second widest margin of underperformance since the launch of the euro. This CAC 40 here is this white line, clearly has been sagging. Now, the recent underperformance has been driven by some weakness in bank stocks. We flip on, we can just check at how those three largest French banks have been performing over the last 2 weeks. We've got BNP, Soc Gen, and Credit Agricole all fiercely in the red in the last 5 days of this session. Now, a lot of this guide does have to do with the underperformance of bonds. A lot of these French banks do hold French OATs. They also hold them on asset swap, and the asset swaps have been widening and actually have delinked from how the German asset swaps have been trading. We flip on, I can just show this visual in a chart because it's very important for these bank treasuries who do hold these asset swaps. We've seen them quite a de-link here. We've seen the German asset swaps narrow a bit, but the French asset swaps are staying very wide. What also is very interesting, Guy, is we've now seeing French yields on par with those of Greece. And being someone who worked on a trading floor during the sovereign debt crisis, that was something I never thought I'd see. If we flip on, we can just show how the 10-year yield in France has been trading versus Greece. They were less than half a basis point away from inverting in yesterday's session.
It's amazing to watch, isn't it? And amazing to kind of set ourselves up for what could come next. The crisis was at the periphery. Is the crisis now in the core? Klaus Baader, global chief economist at Soc Gen, joins us now. Do we have a crisis at Europe's core?
No, but we've got a lot of economic weakness. And we have a very difficult political situation. You know, both in France and in Germany, the politics, to put it kindly, are in a mess. And nobody knows where the German election is going to go when it comes at the beginning of next year. And nobody knows how long this French government is going to last, which, of course, doesn't have a majority. And it's, of course, a corollary because both of those economies are also weak. And they're kind of the taillight. I don't think that we have a general problem in the euro area, but it is quite special when you have to say that the most stable of the European governments is the Italian one.
Absolutely. And you can see that big reflected when it comes to what the prices of BTPs are. What happened? You sat down and I asked you what happens after the French government falls, and you said, I don't know. What happens at the heart of Europe if we don't have a functioning French government, if we can't figure out how to get a budget? Europe has many crises right now. It is facing potentially a hostile Trump government. It's got China to deal with. The situation is difficult right now. Yeah. Does Europe get worse if there is... Are we going backwards if we're not going forwards? If there isn't progress at this critical moment, is Europe just losing out to everywhere else on an even more dangerously?
Yes, I think that's it's inevitable unless Europe gets its act together. Now,
What does that look like? What does Europe getting its act together look like? If you think about the leadership that's coming in France and Germany, what does getting its act together actually mean?
Well, it means, first of all, getting back, particularly for France, getting back on a sustainable fiscal path. Do you do that on the revenue side or on the expenditure side? That's absolutely key. For Germany, the matter is getting a government that can function, and for the core of Europe, for the Berlin-Paris axis, to again start working, coordinating, and particularly, as you say, against the U.S. government, or faced with the U.S. government that is going to be a lot more hostile.
Klaus, I mean, you mentioned this. You said that one of the most stable governments looks like Italy. Is there anything that the core can learn from Italy right now about what they're doing, about how they've handled the crises that they've faced? And I'm thinking here about the economics, obviously. That's your area of focus.
Yeah. I don't know that Italy really is a shining example here for the rest of Europe. You know, Germany has some very specific problems. And one of its key problems is, of course, its automobile industry. And France is suffering, of course, from, some really serious, longer-run fiscal challenges. And in particular, those, of course, are related to pensions. France spends more on pensions as a share of GDP than any other country, and they're on a trajectory where that's just going to get worse.
Yes, and meanwhile, we deal with all this French political uncertainty, yes, and in Germany as well. But do you see this weighing on the underlying economy? So there's the politics can play out as the politics plays out, but in the meantime, is it doing damage?
It's very hard to say. We have a number of examples in Europe where economies that didn't have a government were doing just fine. Think of the Netherlands, think of Belgium as really the standard example. So
the adage used to be that almost was helpful sometimes.
Well, correct.
Fewer people standing in the way of things.
Yes, but it really depends on your situation. And when you have a situation like in France where the budgetary position is very difficult, you need to do something. I think that's really the key. If the economy is running just fine, then that's okay. But the economy isn't running, just fine.
But if the goal is to be more competitive and the goal is to be growing faster, how do you do it without incentivizing or subsidizing? How do you do that with those fiscal handcuffs?
Well, you have to set you have to set the right incentives. But I think in Germany, I get the sense that Germany is regulating itself into oblivion. And that's really the issue. I think there's a great deal of overregulation. And as we know, there's been we need to do a lot to protect the environment. But at the same time, we don't really want to kill the economy. And the fact that the Greens in Germany are now the least popular party, I think tells you something about to what extent the populations are ready to tackle those issues. But, don't forget, let's not forget. You can't just compare Europe with, for instance, the United States. The underlying growth dynamics are very different. And that has a whole lot to do with demographics. In Europe, the labor force is hardly growing at all. And that gives you, even when you do have reasonable productivity growth, gives you maybe a potential growth rate of around 1%. That's being kind of generous. In the US, you're easily looking at 2.5%. But that's because they have to grow that much. And I'm not even going to talk here about China or India, where those rates are substantially higher. So, but the point, one thing I think is important to note here as well, the pressures on the French government bond market also reflect the fact that it is, as far as I know, the most widely held bond market outside of the euro area. Because it's a big liquid market, has a reasonable yield, a substantial pickup over Germany. And so when people become concerned about Europe, and particularly about France, they sell the OAT. And so they face those headwinds more harshly than just about any other economy in Europe.
So what is the ripple effect of that as well? We started this conversation with Guy asking, is the core in a crisis? And you said not quite yet. What gets the core to a crisis? Not that I'm rooting for one, but I am curious how much worse things have to get to say we're in a crisis. Long pause there.
Spreads at double where they are now. I mean, that's what the last crisis looked like.
Well, yeah. But the levels of interest rates, of course, is what really matters. If you get just a succession of French governments that fall, nothing is going to change, right? If the Barnier government gets thrown out, you're just going to get Macron reappointing him, and you don't get anywhere.
But this sits against a conversation where we've got Draghi over here going, we need to do all of these things. We need to get Europe competitive. We need to be able to be globally competitive. We need to change the way we're thinking about so many different things. And over here, we've got a French government and a German government that can't do anything. How do we get from there to get Europe to be competitive when we don't have we don't have the politics to be able to achieve that, or the will, it seems, even at a wider European level, to do that?
Well, there is no alternative, is there?
Okay.
There is no alternative. You have to get a working government that can tackle these issues and not just sit there and argue amongst themselves.
So waiting for 2027 and the French presidential election, that's too long, is it?
Yes, it's absolutely too long. I mean, the really big first topic here is Germany.
Yep. But we're done with that at the beginning of next year. We should have a new government.
Yes, exactly. We should have that sometime in the first quarter, let's hope.
France?
Well, Macron cannot dissolve government more than once every 12 months, so we're stuck with this situation. But there is also, you've got to think about the other party, and of course, in particular, Marine Le Pen. Right? And I don't think that the right in France, the extreme right in France, is really going to benefit by being the complete disruptor.
Yep. We're going to wait and watch over the next few days to see whether or not they take that route. Klaus, great to see you. Thank you very much indeed for joining us. Klaus Baader, Global Chief Economist, joining us from Soc Gen. Up next, we're going to speak to the Lebanese Economy and Trade Minister. This is Bloomberg.
Welcome back, everybody. This is the opening trade, 30 minutes until the start of equities trading here in Europe. Let's bring up the futures picture and have a look at what that tells us. Yesterday, we saw some weakness coming through in the United States. There were, on multiple fronts, Dell and HP, we had worries there around their performance. But then we got the news out of Microsoft as well about the FTC investigation into Microsoft on a number of fronts. And so that weighed on the tech index. That after we've seen 7 days of gains over in the United States in terms of the stock story. Let's have a look at bonds bonds? Because after our last conversation about France, we are certainly watching what happens with French OATs. There's the 10-year yield right now, 3.023. Not sure if that's actually opened for this morning. The spread certainly unchanged on my screen. 86.4 is where we are, so not much of a change after yesterday's trading in terms of that spread. Kriti.
Let's turn now to the Middle East. The ceasefire deal between Israel and Hezbollah is holding in Lebanon more than 24 hours since it took effect. Residents returning to the southern part of the country after a conflict that has displaced 1.2 million people and saw more than 3,000 lose their lives. Let's go to Bloomberg's Jumana Bersetchi, anchor of Horizons Middle East and Africa. Jumana.
Kriti, thank you so much. Well, joining us right now is a very special guest from Lebanon. I'm very pleased to say that the Lebanon Economy Minister, Amin Salam, joins us. Good morning to you, sir.
Good morning. Good morning.
Thank you for joining our show. I want to ask you how you would characterize the truce that was agreed to yesterday, because many people out there are calling it a 60-day ceasefire. What is your characterization of what was agreed to? Is this a permanent ceasefire? Do you see this as an end to the war?
Well, I mean, as we heard, President Biden used the word permanent. He was very clear that there is a clear intention from all the friends of Lebanon, all the allies, that they want this to be a permanent ceasefire. Honestly, as a Minister of Economy, part of this government, I call this an opportunity. It's more of an opportunity. It's not a celebration. It's not a win. It's an opportunity for Lebanon today to really seize it, to save the country from further devastation, from further escalation into this war that Lebanon has paid a very, very heavy price for. So I see this as a very good opportunity backed up by big countries like the United States, like the European Union, like other major players from the Arab world, including Saudi Arabia, Qatar, Egypt. So we should seize this opportunity and save Lebanon. It's an opportunity that might not come back if we don't know how to handle it.
Yeah, absolutely. And not just handle it, but also make sure that it is implemented properly. Because if you look at the terms of the truce, they mirror very much that UN Resolution 1701 that was put in place after the 2006 war. The issue with that is that it was never fully implemented. What guarantees do we have this time around that Hezbollah are going to adhere to the terms of the truce?
Well, times have changed. Since 2006 and 2024, things have changed. There's a big shift in the region. There's a big shift in Lebanon. We, as a government, and you know Hezbollah as part of this government, have felt, at least for the past few months, that there is a complete change in the tonality of Hezbollah's approach to the next stage in Lebanon, to the next Lebanon that we dream of. Because, as you know, probably Lebanon for the past 75 years has paid a very heavy price for the Israeli-Arab struggle. And we have never witnessed really a serious sovereignty for the government, for the Lebanese military all over the Lebanese territory. I think it's about time everybody realizes, including Hezbollah, that we cannot keep running away from this. If this country is to be backed up, if this economy is to be supported, and if the damage is to be rebuilt, we will need to adhere to all the international laws, to 1701, and we need to become a fully sovereign state with a president, most importantly elect a president, for the international community to take this country seriously and trust that they can support it to get out of this dark tunnel.
Yeah. So there needs to be political rebuilding in order for the economic rebuilding to start. Let's just start with your imminent priorities now. As economy minister, you're talking about 1.2 million displaced people. We saw social media videos of many of those families returning back to their homes in the south. What are you doing to help those displaced?
So the displaced people is a very, very large-scale operation. It's very costly to the government, and without the international aid, we would have not been able to continue that. That's why we kept saying that a ceasefire is important, because if that was to extend, if that war was to extend longer, we would have needed about $300 million a month to be able to cater to the operation handling all the displaced people. Now, as far as them getting back to their villages, there is a program that we set yesterday, particularly with the Lebanese army, because the priority is the safety of their return now. And over 60%, 65% of those people still have their homes. However, the government is working now on securing a safe and sound return for those that still have their homes. That includes food security, that includes proper shelter, that includes commuting back there, and most importantly, to make sure that there are no leftovers of this war that can create certain security issues like explosives and rockets that have not been, exploded yet.
The World Bank estimates that economic losses are amounting to about $8.5 billion, possibly even more after 14 months of conflict, with the bulk of the economic losses occurring in the last couple of months. What is the strategy for reconstruction here, and how much is Lebanon's reconstruction going to be reliant on that international aid that you talked about coming in?
So the World Bank report, exactly as you mentioned, they put out a couple of numbers, that one that includes the negative impacts on the economy, one that included the destruction, and few other numbers that related more to the GDP over the next few years, and growth plus unemployment. We did the math as Ministry of Economy, and we realized that the real number today is an estimate of $15 billion. And this number is going up. I'm sure now after the ceasefire, when we do proper assessment on the ground, the numbers are going to look much bigger. The only way to deal with is really, as I mentioned earlier, is to have Lebanon regain back the trust of the international community, elect a president very fast, and a new government that can go around the world, attending and organizing conferences to support Lebanon, because we're talking about a big number. When we're saying $15 billion, it's not going to be easy to rally that. It's not going to be easy to collect and gather that for Lebanon unless we have something to offer. We have transparency, we have a government in place, and we have something to showcase to the world, that especially the world that wants to see Lebanon come back on its feet, particularly on the economic side, because everybody knows a ceasefire or an end of the war without fixing the economy will not mean anything to the country, because the country will fall apart again once the economy reality hits back if we don't save it.
Just a final question for you, just to bring it back to the politics, because people have been talking about the de-linking between the situation in Lebanon and the ongoing now conflict still in Gaza. To what extent do you think what is happening in Gaza is going to continue to weigh on Lebanon's fortunes in the future?
Well, we have always been affected as a neighboring country. We have always been affected by anything that happens in Palestine, anything that happens in Syria. The history of Lebanon has been affected by the struggles in neighboring countries. However, I can tell you today in politics, if we're talking internal politics, government politics, Hezbollah politics, again, as I said, there's a big shift even in the Hezbollah tone today. And that was one main reason that made the ceasefire possible, that Hezbollah and their allies, made it very clear that they are willing to divide, or they are willing to steer away from connecting Lebanon to Gaza to save Lebanon. That was a very, very serious moment of change in the politics in Lebanon, and particularly how the two routes were connected. So that's a good thing, because we need that ceasefire and we need that stability on our front to get back the country on its feet.
Minister, we appreciate your time this morning. We know you're a very busy man. Thank you for joining Bloomberg. That was Amin Salam, Lebanon's economy minister. Guy, I'll throw it back to you.
Joanna, thank you very much indeed. Joanna Bassetti joining us out of Dubai. While that conversation has been happening, we have seen events unfolding in France. The French finance minister is currently on French radio saying France is not Greece. The financial markets disagree. We now have parity for French bonds and Greek bonds. Who'd have thought that a few years ago? We talked about convergence when the euro first arrived. Are you sure the French wanted this kind of convergence?
Yeah, is this the kind of convergence everybody had in mind? I'm not sure. Yeah, really interesting timing then for this conversation with the French finance minister. And still we're asking the same questions about whether this government can be one that will get a budget through. We were hearing from Klaus Baader. If this government falls, he'll maybe with the same prime minister try to get a different budget, different... how long are we going to keep going through this around in circles on this one, perhaps?
When the French premium rose higher than the Spanish premium, there were cheers in Madrid. Everyone was very excited. It was a point of pride. I imagine something similar might be happening in Greece right now.
I should point out, I think we've got Mark Cudmore coming up later on, who's going to flag to us something from the Markets Live blog, which takes a wider look at risk measures, not just the 10-year spread, and perhaps tells us something a little more nuanced. So we can throw that into the mix. But no escaping the fact that the market thinks that French debt is now riskier than Greek debt.
Or at a parity with Greek debt, which is fascinating. The journey that Greece... It says as much about Greece as it does about France, maybe, in terms of that journey that has happened. As Anna says, we're going to go live to France very shortly. We'll get more on that story. Our colleague Caroline Conan is standing by to be able to update us on that. We'll get Mark Cudmore's take on all of this, as Anna says, as well. That's all coming up. Futures are pointing a little positive today, but how much you can read into that remains to be seen. This is Bloomberg. Happy Thanksgiving. That's the story for financial markets today. You are going to see probably lighter volume. You are going to see financial markets to a certain extent moving on, but there is going to be limited moving on without the Americans participating. So, yeah, you can look at the screen in front of you, look at the futures story, and it probably tells you more about yesterday in America than tomorrow in America. And it's going to reflect some of the things that are happening in the tech space. Let's talk about what is happening in the bond market right now. The French finance minister has just been on French radio saying France is not Greece. The financial markets disagree. The red line on my screen over the last few minutes, French 10-year borrowing costs match Greece's for the first time. Talking of red lines, let's cross over to Paris now and figure out what is happening and what the latest is with this government and where it goes next, and what Marine Le Pen is ultimately going to do with this. Caroline Conan joins us for the latest.
Yes, so Marine Le Pen clearly, as you know, is the kingmaker in Parliament. We knew there was going to be a vote of no confidence at some point, but we didn't know exactly when. It seems like the calendar is accelerating. We've seen the panic on the French bond market over the past couple of days, and also the pressure we've seen on banking stocks. For example, SocGen has lost about 5% over the past 2 days, because clearly what Marine Le Pen is trying to do here is trying to change this budget, trying to say, I have some red lines. I have some red lines on the indexation of pensions on inflation. I don't want to see prices of electricity rise. I don't want to see prices of medicine rise. Obviously, she's thinking long term. She's thinking about her electorate. And clearly, what she is trying to do here is to add so much pressure that Michel Barnier will just have to say yes to everything she wants to change in terms of the budget. Otherwise, he's going to face this vote of no confidence.
And you say that the timetable is accelerating, Caroline. There are plenty of things that, we have some visibility around that, and some of it remains opaque, and some of it's still far in the distance. I mean, Marine Le Pen is herself facing a court case, which we might not get the results of until March, I understand, which could limit or not her political ambitions. In the meantime, what do we know about what happens when in the French story?
Yeah, the court case of Marine Le Pen, we're probably going to find out the verdict on the March 31st. And obviously, if it doesn't go her way, she may not actually be able to be a candidate for the next presidential elections in 2027. But what she's trying to do now, like, for example, next week, actually, there could be a first vote of no confidence as soon as Wednesday on the social security part of the budget. That's what she has already warned about. And in fact, some analysts we've been speaking to, including earlier on Daybreak Europe, actually tell me that she has gone so far in the media trying to say that, she has the control, that it's going to be hard for her to not support a vote of no confidence.
Si le budget reste en l'état, nous l'avons toujours dit.
If the budget stays the same, yes, this is not a surprise. We always said it for the past 3 months.
Je veux dire, si ce budget passe pas...
I'm telling you, if this budget is not approved, the budget of last year will apply, and actually it's not as bad as this one, as there are less taxes for the working and middle classes.
So there's one
Marine Le Pen
deadline next week on this first.
All good. Caroline, I'm going to pick it up there. We thank you so much, of course, breaking it all down. We heard from Marine Le Pen there. Caroline Conan is going to give us all those updates as she follows the story. We obviously appreciate you walking us through those key headlines this morning. Let's talk about the market reaction off the back of it and bring in Marcus Live executive editor Mark Cudmore. Mark, we've been getting a lot of headlines on where the French debt stands, how you kind of allocate to all of this. Walk us through your perspective.
What's interesting at the moment is that the stress is very much focused on the bond market. The euro has been trading relatively okay this week, and it is in the context that it had weakened a lot in the prior couple of weeks. And we're even seeing there's not so much stress in the equity markets. Our colleague Simon White has an excellent broad indicator of French stress, including bank CDS, swap spreads, equity market relative performance, and the broader bond comparison. And it's not showing the level of the stress that we saw during the snap election announcement by Macron in the summer, or even when we were trying to form the government a couple of months ago. So therefore, it's interesting that there's very acutely focused on the bond market. That makes sense for now. But if we don't get a good budget conclusion over the coming weeks, I think this could really has the chance to really blow up into a very, very big story. It is not yet my base case that we get another euro crisis, and I don't want that to be the message I sent today. But I think there's a non-negligible risk that we do get another euro crisis. And given that would be such traumatic consequences, we need to keep a very kind of keen eye on this until we get some kind of conclusion what's going to happen with those budget negotiations.
Yes, and obviously this would be a bigger economy, a bigger part of the Eurozone than crises we've known and dealt with in the past, perhaps, then, Mark. So we'll certainly keep that in mind and keep it under review. Elsewhere, of course, it is Thanksgiving in the United States. We've had some PCE data out there. We're waiting for the holiday season, I suppose, to kick off. In terms of the sentiment where you are in markets, as we're in Thanksgiving, low volumes, how do things look at this point, Mark?
Everything seems to be moving on the latest headlines around trade tariffs. You know, whether it's the good chat supposedly between Trump and Sheinbaum, the Mexican president, overnight, or whether it's the Bank of Korea's preemptive kind of cut in that perception that Korea would be very vulnerable to kind of trade tariffs. We've had comments out from the ECB already this morning. So every country at the moment is viewed through that lens. I think that the problem is there's just this massive divide out there in markets about whether tariffs will actually be implemented or whether they're just purely a bark and the bite won't really be so firm. It's a negotiating ploy and Trump won't really impose any of these things. I think it's without clarity around that, it's hard to be very high conviction, either bullish or bearish. And all you can go back to is look at valuations. And that is US stocks are very expensive. In a good world, they can keep on doing well, but they are vulnerable if trade tariffs make cost much more expensive. On the other side, there are many markets around the world that are heavily discounted. They're already trading a negative story.
It's going to be interesting, though, to see whether or not, given the fact that the risks potentially are greater outside of the United States, whether or not the safety trade is to therefore just put more money to work in US assets.
I don't think that the greater risk is outside the US necessarily. I think US companies are extremely vulnerable to an increase of cost of trades, and given their valuations, they may indeed even be more vulnerable. And I think it's a false narrative.
Mark, thank you very much indeed. Bloomberg's executive editor for Markets Live, Mark Cudmore. You can get more from Mark and the rest of the team. MLIV Go on your Bloomberg terminal, Kriti.
Let's get our stocks to watch. Joe Easton from our equity team is coordinating, of course, watching everything in the micro space. Joe, walk us through it.
Morning, Kriti. So Direct Line has a takeover bid from Aviva. It's about £1 higher than where the stock closed yesterday. And remember, this company did actually get a takeover bid from the Belgian firm Ageas earlier this year. The stock has since trended lower after no deal could be reached, so we would potentially see some big upside in this one today. And analysts are also saying whether or not Ageas comes back with another counter bid is a question they'll be asking in the coming days. And also whether the Aviva's share buyback comes into question, given it is a big outlay for that company. That's the take from a few analysts this morning on this one. Then in terms of the drink stocks, we got Remy, Cointreau. Once again, some really disappointing numbers from the firm, a drop in sales and margins that may actually be even worse than some of the downgraded expectations. We can see this stock down around 70% over the past 3 years. You'd think a lot of this would be priced in, but we are seeing calls lower on this stock, and we're going to also be watching the peers, which have all been hit over the past year to date, including Pernod and even LVMH down the bottom there. Then we've got IDS, Royal Mail. Potentially this deal by Daniel Krasinski is moving closer, according to the BBC. It does trade slightly below that. Keep an eye on IDS later. A couple of rating changes I've got my eye on as well, particularly Tesco upgraded at JP Morgan today.
Joe, thank you very much. Our equities reporter, Joe Easton. Lots of stocks then, individual names to keep an eye on. Some M&A news flow in the mix, a bit of earnings as well. We'll certainly keep an eye on the luxury sector. It is Thanksgiving. Hope you can join us for the start of European trade, at least. That's coming up next. This is Bloomberg.
Good morning. Let's talk about the day before Thanksgiving and talk about the impact that it's going to have on European markets today. US markets are out today. They're enjoying the turkey over in the United States. Yesterday's trading looks a little bit like this. European equities rally into the close, which is interesting, back up to the fat line. The US market then sells off in the afternoon. Big tech, the big focus over in the United States as we see it coming under pressure. Stocks like Nvidia, Microsoft, all moving down yesterday. Is there trouble in tech land? That is a question that's being asked on Wall Street right now. We're going to see the answer maybe post-Thanksgiving as we start to get more details on what is coming out of the Trump administration as well. But that's the setup into this morning. And we've also got this Biden chip story that we need to fold in as well. Does that impact European trading at the get-go this morning, Kriti?
Well, Guy, if there are jitters in this market, it's not showing up in the futures picture. Green on the screen here. Whether this is autopilot, whether this is light liquidity. Again, maybe they're just getting ready for Christmas now that Thanksgiving is over. But really, to me, I think what stands out here is that the CAC futures are actually higher by 0.4%, despite the political overhang that we're seeing, Anna. In futures, maybe a little bit more optimism.
Yeah, absolutely. So we'll watch to see what Thanksgiving delivers on this side of the Atlantic, even if it's not going to deliver for markets on the other side of the Atlantic. In terms of the individual stocks that we are watching then this morning, let me talk about Aviva, because this is one that we will have in focus because of its bid for Direct Line. That coming after hours yesterday. We've seen Ageas already had made a bid for Direct Line, of course. So whether we'll see Ageas come back and make another bid for Direct Line is going to be of interest to investors. What impact, as Joe was saying, does it have on Aviva's return of cash to shareholders? Remy Cointreau disappointing with its numbers. And we're watching to see the latest news flow around Royal Mail. As Joe was saying, that could be of interest with regards to the Czech billionaire Daniel Krasinski.
Let's take a look at this market open then. Thanksgiving Day in America. Low volumes likely, certainly as the session progresses. But let's see how we're getting going here in Europe, at least this morning. Maybe a little rear view mirror stuff being priced into the market. The FTSE 100 is up by 0.1%. It'll be interesting to see how quickly everything else gets going this morning, given the fact that we aren't expecting a big volume day. The Stock 600 is up by 0.3%. We'll wait and see what happens with the CAC this morning. I think the CAC's probably the focus of our attention. Big moves yesterday, particularly in the banking sector. This morning we see Greece and French bonds trading at parity, which is a fascinating development. The CAC is, though, up by 0.4%. Remy's in the mix there as well. The DAX getting going a little early, up by 0.5%. So a little positive start for Europe this morning as we think about Christmas and the fact that it is coming post-Thanksgiving, Kriti.
Did you really just say that? Oh, my gosh. Guys on the Christmas train. I'm thrilled. We'll get there. We'll get there. When you look at the stock market open this morning, you are seeing that optimism, to your point. A lot of that feels to be tech-driven. Your biggest index contributor to the upside on the Stock 600 is ASML. And that really speaks to that story that Guy and Anna were referencing earlier in the show around applied materials, the kind of bump that maybe some of these Japanese makers can get as well. That's certainly feeding into the European session. But some of the underperformers of the last couple of days also reversing. But But again, it is a light liquidity, light volume kind of day, as Guy was pointing out, Anna.
Yeah, absolutely. Worth lingering on that move on ASML. 4.5% higher then for the chip equipment manufacturer. And this in the face of difficulties that US chip equipment manufacturers are going to face in supplying high-tech AI chip manufacture to China. And so that sent, as you say, Kriti, the Japanese competitors higher. It's now sending ASML higher. And I think maybe you get this sense that as we come towards the tail end of the Biden administration, there's even less chance that the Dutch and other allies are going to go along with these measures against China, perhaps keeping their powder dry, waiting to see what Trump delivers. And if they've got then cards to play on this front, choosing to wait and play them later. So ASML in the meantime looks strong.
It's interesting because there was a sense, I read the story first thing this morning, and my sense was that this could have been worse.
Yeah.
That the Biden administration could have gone further. And I'm surprised, given that if that was the sentiment, you would have thought that would have been priced in, that there would have been some anticipation that maybe AMAT would have suffered.
The market not reading the original news flow, perhaps. Yeah,
maybe.
Just responding to this as if it's the first time we've seen it.
Yeah, well, the theme here, right, is that there is a chip glut that a lot of these chip makers are going into. So when you remove or put restrictions on some, it just opens up market share for others, and perhaps that's the read-through as well. In the meantime, I should mention we are also getting headlines on the macro front out of Spain. Their preliminary November hard money CPI numbers coming in bang in line with estimates at about 2.4%. The estimate there was 2.4%. But in an environment where we're talking about which debt on the periphery outperforms, this is a relevant number to keep an eye on. Let's marry it all together. Joining us around the table, Bénédicte Lowe, equity and derivative strategist for Europe over at BNP Paribas Markets 360. Now, I'm not going to ask you about Spanish CPI, but I think it is relevant in how you trade some of this equity story in Europe. What is actually driving these markets? The stock market, I should be more specific. Is it still the inflation narrative? Is it ECB cuts? Is it the Trump overhang? Or is it the political situation? What is driving, do you think, the stock 600?
I would say since the end of September, there's been the massive pricing of a Trump trade. With Trump, first of all, that was rising in the poll, and then his election. And really, we've seen the massive underperformance of the Euro stocks versus the S&P over that period. That brings the year-to-date underperformance of 5V over S&P of 20%. That is very, very massive. So really been driven by sentiment mostly. So we've seen that earnings were not great. We still have weak macro. So the background is not really positive at the moment in Europe, but it's been really a sentiment that has been driven this really massive underperformance versus the S&P.
So what does it take to make Europe attractive again? What does it take in terms of valuations or pricing or even buyback strategy that maybe attracts a little bit more of that international capital?
Yeah. So when we look at our positioning, which is the US versus European positioning indicator, we've seen that the divergence between the two is at the max level that we've seen over that period since 2017. The last time it was at those levels, there was 2 times. It was before 2018, the Volmageddon episode where we had massive inflow into US equity, and the second one was during the Russia-Ukraine war episode in 2022. So really, really stretched levels. So that means that we can have a squeeze higher because basically Europe is unowned, unloved, meaning there's very low positioning in those regions that can lead to a squeeze higher into year end. Or the story next year means there's a lot of negative news already in the price around the tariffs, so we can have Europe that performs on the back of that. Maybe a peace deal on geopolitical conflict between Ukraine or Russia. And also the rate story, that is a really important one. The Eurozone is really dependent on rates, it's very sensitive to the rate cycle. So if we have lower rates with the ECB, that can benefit more the Eurozone than elsewhere, basically.
Just to simplify this, so I buy puts on US stocks and calls on the rest of the world.
Yeah, I mean, it would have been a tricky one to hold. But one of the position that looks quite good is put on S&P or versus put on another index, because that has been the really big
so the relative trade of the 2 puts is maybe the way to go to keep to preserve.
And you
capital.
get that. Yeah, there's more like there's a premium on European vol at the moment, and meaning that you are selling that put with a more decent like kind of vol premium. So you're getting an interesting vol premium on that one. Yeah.
In terms of what we've seen this year has just been Europe's been cheap for a while. What changes to get the market going? You just gave me a whole load of lists of things that could change. Are they big enough? Can they change the narrative? Because I've been hearing this story for a while. Europe's been cheap all year. Europe's been cheap for ages. The valuations get more and more stretched. What actually needs to change in terms of US investor sentiment towards Europe to get that shift in mentality? Because that feels like it's what needs to happen here. I think it was a piece in the Journal this morning as I was coming in reading it, talking about the underperformance of people's portfolios in the States because they've got this kind of 25% slice of European equities in their target plan pension funds, in their 401ks. And those are the headlines that people are reading in the States.
Yeah. So a few things. First of all, that is definitely a contrarian view. I think the US long has been really a consensus trade. But one thing has been that we looked at what happened usually when we got this massive level of underperformance. This has happened only 9 times since 2000. Yep. And what happens a year after that is usually European stocks tend to perform well. They tend to rise 9 to 10% a year after that. Now, the key thing is they don't necessarily outperform the S&P, so maybe that's not really the trade that you should be pushing for, but they tend to go up. So it doesn't mean because we had a kind of difficult year, we had geopolitical issues, we had also political issues, and we're going to get another election into next year. But that doesn't mean that European stocks don't perform down the line. Maybe not outperformance versus S&P, but still good performance for next year.
Okay. Bénédicte, talk to us about volatility. It seems as if we say a lot, the only thing that's certain is volatility. But actually, reading your notes, you put 2024 in perspective, and actually, was it not as volatile as it felt? Talk to us about the sort of what you actually see on volatility markets during 2024 before we look ahead to next year.
So 2024 has been a year where there's been some pockets of volatility. So we had the French election episode at the start of the summer.
And I remember August.
Exactly, the August massive sell-off, exactly, with the VIX going to 60. So we had those two episodes, and then we had the US election, and we saw that vol was floored around that episode. We saw like vol repricing higher, because basically that was the main event of the year. People were taking some chip off the table. There was some uncertainty around who's going to win, and what you tend to see, there's this cyclical pattern where volatility tends to go up. Now, post that, we had a vol crash in the US. This didn't happen to the same extent in Europe because we had, first of all, this massive spot on the performance, but also because we had the resurgence of geopolitical risk. Now, we say going into the next year, we've got a decent vol premium versus the US, around 2 vols, and also we've got the fact that vol is actually not really realizing. When you look at the 10-day realized vol on 5E, it's at 10-11. You're paying 15 on 3 months. So you're really seeing that premium, and people will start to harvest it once because it becomes just so tricky to carry.
And what does that tell us about Trump and the level of volatility he introduces into markets? Obviously, we can look back at his first period in the White House, and maybe that is or is not useful this time around. Was he volatile then? Will he be more or less volatile now?
Yeah. So when you look at 2017, that was the first year that Trump came in, that was the lowest ever realized vol for S&P and second lowest ever realized vol for 5E. So Trump didn't equate to higher or excess vol into the market. Now, in 2018, we had 2 episodes of higher vol. That was Vol-Mageddon, but that was driven by kind of massive short vol positioning. And we had the sell-off at the end of the year, but again, driven by more US rhetoric in Europe. The realized vol were also quite low in 2018. And when we look at the analysis of whenever Trump was going to the media and saying he was going to put some tariff on Europe and China, we didn't see excess vol at those levels. So really this was pointing more to spot underperformance or spot reaction, more so than vol market reactions.
All right. Bénédicte Lowe, equity and derivative strategist for Europe over at BNP Paribas Markets 360. We thank you so much. She's talking a lot about that concentration story, Guy, when we're talking about things like the heavyweights, the core 6.
Let's take a look at what that core 6 looks like this morning and figure out exactly what is going on at the centre of Europe. This is the picture. We are seeing some interesting moves when it comes to some of the tech stocks. Take a look at what is happening with ASML. Is up aggressively on this Biden move when it comes to chips and China. Elsewhere, more muted moves, I would argue. Schneider is up. Nestlé's unchanged. Novo Nordisk moving a little bit. We'll talk about Ferrari a little bit later on and whether or not actually higher tariffs could ultimately mean higher prices, which might actually boost the brand's appeal. We'll talk about that a little bit later. Joe Easton's here with more details on the single stock moves.
So we have got a massive jump today in Direct Line shares, Guy. This one rising around 35% at the moment, but still trading actually below the implied offer price from Aviva, potentially reflecting the fact that Direct Line said that this undervalues the company and therefore they are not engaging with it currently. But we're seeing Aviva's shares coming down, potentially reflecting that they have got a buyback at the moment, and analysts asking whether this is in question. Aegeus or Aegeus was the previous bidder for that one, looking steady. Admiral, meanwhile, the big rival, is gaining potentially a bit of a read across, but a huge gain for Direct Line following that big bid from Aviva, the biggest bid in insurance we've had for a while. Then in terms of other M&A, there's lots going on in the UK today. Take a look at Loungers. This is the owner of Cosy Club. There's one in my hometown, Guildford. I love that place, Cosy Club. Loungers getting a takeover bid. My mum loves it as well. And they're up 29% at the moment from that bid. IDS, meanwhile, now this is the Royal Mail owner, of course, the Czech billionaire Daniel Krasinski, moving forward with this takeover bid. According to the BBC, now the bid was at 370. We're still only at 360 in terms of that takeover price there. And finally, down the bottom there, TI Fluid, another bid coming in around £1 billion for the maker of hydraulic brakes for that one. So lots going on in the UK. In terms of the drink stocks, though, pretty steady at the open there. Well, actually coming down 1% now for Remy Cointreau. Another downgrade to sales guidance, but the stock down 70% over the past 3 years. So potentially a lot of this priced in, but still seeing a little bit of a dip. That is potentially surprising given how much it's sold off. But as I say, the numbers worse than expected on that one. And then in terms of chips, that news about the potential US rules on those potentially not being as harsh as some expected in terms of between the China and US, the chip supply there. And as such, we're seeing a decent gain. Guy mentioned earlier ASML, but we're also seeing ASMI and VAT Group coming up. BE Semi, a pretty decent move in those chip stocks today. In terms of morning calls, Tesco, a double upgrade, and so is Sainsbury's. This is at JP Morgan that says the thesis of declining food inflation has actually played out now. So they upgrade both of the big UK supermarkets. Tesco up 2%. There. And then finally, Telecom Italia. This one is upgraded over at Exane. They say that telcos is a way to play the macro and geopolitical uncertainty. They like telcos in general. They upgrade Telecom Italia. That one's marginally higher in Milan today.
Joe, thank you. Joe Easton with an update on your movers. Yeah, technology stocks doing really well today. They're up by 1.8%, really lifted by that move in ASML. We will get to that story shortly. The US is said to be readying more curbs on sales of semiconductor equipment and AI memory chips to China. That seems to be moving Japanese tech stocks, European tech stocks. We will get all the details next. This is Bloomberg.
16, 17 minutes past the opening trade. This is what equity markets look like here in Europe this morning. Tech is on the front foot. ASML certainly seems to be a big beneficiary of what the Biden administration is up to, because it's said to be weighing additional curbs on chip sales to China. A crackdown that some say stops short of some of the stricter measures that had been previously considered. Let's talk about this. Katya Dmitrieva joins us now to talk about what is going on and why the Biden administration is doing this. Let's talk about why now. Clearly, this is an administration that is coming to its close. What is the Biden administration trying to do in the final days of office?
Well, I think that's exactly it. You know, the Biden administration has limited time now, about, 8-9 weeks, give or take, to kind of move through the policies that they had promised before. So officials had been discussing, specifically to do with chips, these additional curbs. And this news that we have, which is a scoop from our colleague McKenzie in D.C., really highlights and gives market watchers some very much needed information, because previously there were so many questions about what countries this would involve, how many companies would be targeted. And it looks like the final results, or what's currently being discussed, is a lot smaller, or significantly stepped down from what policymakers and some in the markets had expected. So I think that's why we saw Japanese stocks, in fact, moving up after the news came up, and also some Chinese stocks as well, some Chinese companies rather, that were previously thought to be on the initial list didn't actually end up making it on. Of course, we don't have the final statement from Biden or officials. That could be coming kind of as soon as next week. But it's the TLDR of it is that it's significantly stepped down or smaller from what folks had expected.
OK, that's interesting. And the way the markets responded is certainly interesting, Katya. Where does this leave, then, China-US relations in the final weeks of the Biden administration? A reminder that this administration perhaps is not done and is still active on this chips front.
Yeah, it's really interesting, actually, because in recent days and weeks, U.S. and Chinese officials have been really stressing areas of common ground. So, for example, after Trump announced, tariffs, he's been doing that all on the campaign trail. Biden officials were really keen to underscore areas where China and the U.S. have actually made headway. So, specifically on issues of fentanyl, for example, that was a key piece of what Biden has done with Xi and other officials, is to sort of keep fentanyl off the streets in the U.S. and stop those precursor chemicals from coming in. So that's kind of been an interesting dynamic, especially when you have a presidential candidate coming in, President-elect Trump, who's kind of taken a different route. So, this is sort of the last few weeks where these policies could be made, and really potentially not surprising and smaller in the scale of things to come.
Katya Dmitrieva walking us through all the angles around these chip curbs out of the United States and the ripple effects on the rest of the world. We thank you so much, of course, for bringing us that crucial context. She talked about it. The change in administration may be creating some pretty big moves. And that's a similar theme in the antitrust space. The U.S. FTC launching a broad investigation into tech giant Microsoft, looking into everything from cloud computing to AI, even to cybersecurity ahead of that transition. Let's get a little bit more insight. Bloomberg Executive Editor for Global Technology, Peter Elstrom, joins us right here. All right, so we're no stranger to the FTC going tough on big tech. Well, what exactly are they looking into for this case?
Yeah, in this case, as you mentioned, the Biden administration is trying to get some of these policies through in the last weeks that they have in the term. With the FTC in particular, Lina Khan has gone after these big tech companies very aggressively. At this point, she's concerned about how the Microsoft is wrapping together the cybersecurity technology that they have, cloud computing, AI, some of these different services together. And there's some concerns that they're using that market power to be able to retain their position and keep out some of their competitors. There also may be some risks for customers, including the federal government here, because they're buying so many of these services from Microsoft. They may be vulnerable in a way that they wouldn't be if all these services were not wrapped together.
What is the Trump administration going to do with this? Because this will spill into the Trump administration. There had been this expectation that with Lina Khan gone, things were going to get easier. Is that really going to be the case?
Well, that's the big question here. We saw with the export curbs, the Biden administration is able to get those things through pretty quickly. They can issue these executive orders. They can actually move ahead with these things. An antitrust case does not work that way. It takes years and years. Yeah. We saw that in the last investigation into Microsoft that dragged out for many, many years. So certainly Lina Khan and the FTC are not going to be able to finish this during this term. The question is what the Trump administration is going to do as they pick it up. In general, there's an anticipation that the Trump administration is going to be lighter in terms of regulation, probably lighter on the big tech companies. But there have been a few dissenting voices, including J.D. Vance, the vice president-elect, who's been quite critical of the big tech companies, is quite concerned about what could happen here. So we still have to see those steps. But at this point, Lina Khan is putting her cards on the table. We're going to see exactly how aggressively they're going after Microsoft in this case, and maybe some of the other big tech companies.
I'll finish off with a question on Microsoft, but maybe we'll circle back to some of that because that's really interesting, Peter. How does this compare to the last antitrust probe then on Microsoft? Because we've sort of been here before, what, a quarter century ago?
That's going back quite a while, right. And in the U.S., of course, the FTC and the Justice Department have historically launched these antitrust investigations. Last time it was the Justice Department that was really leading it. They were particularly concerned about how Microsoft was using its operating system, the Windows operating system, to wrap in all sorts of other services with it. At that time, the web browser, they were competing with Netscape. That was kind of a concern. Now we have a much broader range of products. Microsoft, it was powerful then. It's even more powerful now. At that point, there was a decision that Microsoft was a monopoly. It was abusing that kind of power. But it got overturned in the appeals court, and they weren't able to proceed with this breakup that they planned. At this point, they're more powerful, but also they still have to figure out whether they're going to be able to break apart some of these products.
That's what I was going to ask next, because you mentioned the DOJ as well. They're already trying to kind of suggest to a federal judge in the United States, Amit Mehta, I believe, who's ruled on it, of a Google breakup. And that I'm curious what kind of remedies actually are tangible and feasible. And we hear it so much from Washington, but from lawyers, from the pros on the tech side, what is an actual feasible concession, a feasible remedy in terms of how these tech companies can operate?
Yeah, well, we're much earlier in the process with Microsoft in particular. It's not clear how they could divide up some of these businesses. I think the cloud computing business is of particular concern now because they feed into all sorts of other services that they offer, including AI, cybersecurity. Microsoft, of course, has this alliance with OpenAI, which has given it kind of a pole position in some of these AI services. I think for Google, they've laid out that they do think it's possible to break out the Chrome browser in particular, and maybe that's a feasible separation. They haven't really articulated how they would address some of these Microsoft concerns on the antitrust front.
And you mentioned earlier, Peter, that the Trump administration, I think you said the expectation is they maybe go a little lighter on some of this regulatory push, and that might seem sensible at a holistic level. I wonder what kind of wild card Elon Musk is in the mix when it comes to thinking about tech and how the new administration handles tech, because he's got so many views on all of this.
So many views, and he has competitors, he has allies. Of course, he has his own AI venture that competes with OpenAI. He has a history with OpenAI, too. It's not exactly clear how he's going to play a role in this, but certainly he has the president's ear right now. He's going to have the president's ear going forward, too.
I mean, Zuckerberg had dinner with the president at Mar-a-Lago yesterday. I guess all these tech leaders just trying to get ahead of the administration and say their piece. Not staying for Thanksgiving, though, that his spokespeople were keen to point out.
They certainly want to build relationships with the new administration. They've seen that some of the tech industry already has done that. Elon Musk is probably the prominent one, but there are some others that have not done that kind of work so far. So they want to make sure to build the relationships going into next year, going into the new Republican administration that takes office in January.
OK, Peter, thank you very much. Thanks for joining us. Bloomberg Executive Editor for Global Technology, Peter Elstrom, with us on set this morning. Kriti?
Of course, as we monitor the ripple effects of that tech story, we should also keep an eye on the other story we're focusing on, and that is France. As we were speaking with Peter there, French bonds catching a bid, down about 5 basis points on the 10-year as well. I don't really know what to make of that, to be completely honest.
France is not Greece. France. So the finance minister's been on French radio.
Yeah.
Are people listening? Maybe that is the case.
Well, he's apparently saying that he's ready to make concessions.
That's it.
Is that what they're responding to?
That's the line, yes. The question is whether it's better to have a budget that is not exactly the one we want or no budget. And that seems to be where the French have got to. So are we going to see a revision to this budget coming through that will then be able to be passed, acceptable to Le Pen and her party? And that might mean less chance that the government collapses.
She's taken herself quite a long way down this road already. The concessions would maybe have to be substantial in order to get her back on side. That must be the challenge at this point.
We see this bond volatility and we see the stock market volatility, but these headlines don't move the euro. And I'm so conscious of why there's that kind of disconnect between you're seeing this volatility in the spread, but it's not being reflected in euro dollar. Something to be talking about as the days and the weeks ahead. Euro dollar 105.33 at the moment. Coming up, we're going to dive into one of the major French companies making headlines this morning. Remy Cointreau moving quite a bit this morning. Stick with us. This is Bloomberg. This is the opening trade. We're at 30 minutes into today's session. Seeing green across the screen, a lot of that boosted by the tech story as well. We were just debating whether or not that is a positive in terms of some of these chip curbs for the equipment makers, or perhaps a little bit of a read-through of the positivity from Asia. Regardless, you are seeing green on screen. It is Thanksgiving in the States, which means light volume, light liquidity. So there's that element of a little bit of autopilot as well. Let's get to one of our top corporate stories in Europe that we're keeping an eye on. Remy Cointreau has forecasted a larger than expected drop in annual sales, saying it doesn't expect a recovery in U.S. markets until at least the end of the year. Following this closely is Bloomberg's Sabah Meddings joining us around the table. Sabah, we're watching the stock drop about 1.2%. Walk us through the sales story. Why has it taken so long to recover in the States?
I think we have to compare it to what happened during the pandemic when everyone was at home. They were making cocktails, they were drinking, they were really sort of splashing out. So what you saw then was retailers and wholesalers stocked up. They made sure there was plenty of people to buy. And obviously, as that has trailed off, and then we've also seen a consumer slowdown in spending, these wholesalers have got extra stock that they haven't been able to shift. And so that's meant that Remy has taken longer to recover in the US. We're comparing to what happened during the pandemic. And though they were quite optimistic this time last year that it would sort of recover quite quickly, but each time they've reported quarterly results, they've sort of had to say, actually, do you know what? It's taking much longer than we expected for those inventories to push through the...
So they need people to drink through those inventories, basically. That's the message on that front, on the US.
Exactly.
Thinking about the US, tariffs, very much front and centre. Have they given any guidance about what they think the potential impact might be of another Trump administration imposing tariffs on, for example, French drinks companies?
Well, I mean, for Remy, which imports 100% of its stock into the US, there's no manufacturing there. It's going to have, obviously, a big impact if you think about all the product coming to the US. We did ask about that on the call this morning with the CEO. He said that, if this mooted 10% tariff comes in, that's not going to kill the business. But obviously, they haven't been as aggressive with pricing as their competitors, so they sort of have kept prices at the higher end, which means they don't have as much flexibility in reducing prices to keep sales up for customers. So I think they are more worried about China, but certainly it's something we'll definitely have to watch.
There's another way of looking at this, which is basically that the inventories that they've got in the States have already been imported, so there's not going to be any tariffs. So in some ways, that could actually turn out to be a little bit of an advantage going forward from here if tariffs are imposed. You mentioned China. How big an impact are the tariffs there?
Well, I mean, for China, volume-wise, it's the second biggest market after the US, but profitability is the most profitable market for these cognac makers, for Remy, for Pernod, for the others. They've already started having to sort of make deposits for these tariffs, sort of average of 35%. So it is having a huge impact. You can see that in the share prices. Remy down 45% this year. They're not going to bottle in China, though. They've said that because obviously Hennessy had some issues with workers. They were talking about maybe bottling in China to get around the tariffs, but Remy has ruled that out.
OK. Tariffs front and centre. Sabah Meddings, thank you very much indeed. Joining us now, Swetha Ramachabdran, fund manager at Artemis, where she oversees their leading consumer brands strategy. Swetha, what do you make of the Remy numbers this morning? What's your take, and how should we be applying what we know, don't know, on the tariff story to this stock?
Yeah, I think in a sense, the story for the entire spirits sector is one that Sabah succinctly summarized, a story of too much inventory that needs to work its way through the market. And I think this is confounded also by the price increases that many of these companies have taken in the last few years to not just combat but more than offset inflation. With consumers' disposable income stretched, that has come at the expense of top-line momentum, which is what we're now seeing. And in addition, consumers are trading down. So we're seeing that higher-priced variants of alcohol are losing out to lower-priced variants, which, of course, has a big margin implication for many of these companies, given that they make most of their money on the higher-priced variants. So a lot of factors going into play here, but if we look at the share price reaction of Remy just this morning, for what is a 15 to 16% downgrade to earnings estimates, the stock is down significantly less than that, which suggests that a lot of the bad news is starting to be priced in, and perhaps investors are starting to look past the current cyclical trough for the next upswing, given that this is most likely a cyclical downturn rather than a structural one. Indeed, management has already alluded to some green shoots that they're seeing in U.S. depletions, if not in inventories. So a lot to unpack there.
What's in the price for tariffs, though? Are we assuming that tariffs are going to be applied? This looks like an obvious target. Is that already in, or is that yet to be applied?
I think the sentiment and news flow around tariffs is far more damaging to the near-term share price performance than the actual reality. If we look back to Trump term 1 in 2017 to 2020, similar proposals were raised. At the end, all were watered down except for tariffs on imported single malt Scotch, as well as Irish whiskey that's made in the UK but not in the Republic of Ireland. So significant clawback from the initial proposals. Again, we don't know what the outcome would be and whether this is, for instance, as the Treasury Secretary, before being appointed Treasury Secretary, called them a maximalist position and a negotiating starting point, or the ultimate reality. But it's true that Remy, with its focus on maintaining price integrity, has not participated in competition in the US, so its ability to pass through higher prices may be more limited than some of its peers.
Swetha, you were talking about whiskey there. I kind of want to talk about tequila. You and I have talked about where to find the perfect margarita in London quite a bit. But for the Mexican tequila that gets imported here, how much of the pain is perhaps exaggerated or magnified relative to the examples that you just laid out?
So certainly Diageo and Campari are two of the biggest in the spirits industries, the biggest tequila importers into the U.S. They would need to then take price increases of roughly mid-single-digit percentage points in order to offset the 25% tariffs that President-elect Trump has proposed. The thing to note here is that U.S., Canada, and Mexico are covered by the USMCA at the moment, a free trade agreement which has supplanted NAFTA, which itself was the creation of the former Trump administration. So to undo all of that and impose these additional tariffs, whether they are actually passed through is still a question mark. And then you have a partial offset in terms of Mexican peso weakening. So that may, in some ways, dampen the required price impact, that price increases that are required as the exports become cheaper into the U.S.
So my margarita may or may not get a little bit more expensive. Swetha, talk to us about the retaliatory ability on the European side, or even on the Mexican side as well. We talk a lot about U.S. imposing these tariffs. Is there kind of room for retaliatory measures in this space?
Certainly, I think the EU's hand perhaps is a little bit more stretched in this regard, given that they are also engaged, at least on the consumer side, in a separate tariff war with China, where, again, the Chinese authorities have targeted French cognac somewhat symbolically in retaliation for the EU investigation into Chinese EV subsidies. And that's underway at the moment, as Saba mentioned, with dumping duties already provisionally imposed of up to 35%. Some manufacturers talking about bottling in China to get away from this. So really, it's kind of tariff everywhere. But it does seem that the EU's ability, being caught in the crosshairs between China on the one hand and the US on the other hand, is more limited than other geographies.
And Swetha, picking up on that China theme and the dumping duties that have been alleged by China and appealed, I think, by many in the Eurozone. We heard a bit about that from Remy today, but they really seem to be downplaying it almost, suggesting that this wasn't having too much of a material impact. Is that what we've learnt so far from this particular iteration of the tariff story?
So the issue in China with regard to tariffs is that it's not making a difference at the moment because demand is so weak generally. And the variants of cognac that are working in China at the moment are the lower price variants rather than the XO and higher, more expensive variants of cognac that were all the rage just 5 years ago. So that's really why it's not having so much of an impact, because underlying demand is so depressed. When that starts to come back, that's really when we'll be able to get a truer gauge of consumer elasticity and whether that downtrading phenomenon continues because consumers are simply not able to stomach the higher prices. It's possible that in China, because the higher priced variants were sold to a particular group of customers who are simply away at the moment because of business confidence, that the ability to pass through prices there is not going to be as much of an ask as perhaps in the US, where it's the more entry level and mid-priced variants that are the bulk of the market.
We're heading into into Black Friday, Swetha, and we're heading into the holidays. Give us your assessment of the US consumer mood. I think you're expecting a sort of decent holiday spending period. How does that sit with some of the downtrading and destocking that you've been talking about?
Yeah, I think the broader kind of spending environment, the consumer environment, is quite buoyant. For example, we've seen a significant consumer resilience in the U.S. as inflation has started to moderate. The National Retail Federation, which is really kind of propaganda for the retail industry in the U.S., projects record high spending per capita on holiday expenditure. Of course, that's a function of higher prices. But even so, it doesn't seem that the consumer is in a significantly worse state. There's some green shoots emerging. For example, Macy's suggesting that sales, especially of luxury in the U.S., are recovering. Some of the luxury companies calling a little bit of a turn in the U.S., which has been very weak for them after having been a phenomenal market for much of the post-pandemic era. Some green shoots are starting to emerge, possibly need this to sustain. And again, the big question is how much of this will be dampened, perhaps, by potentially higher tariffs and inflation into next year. But at least into year-end, the mood music led by record high equities, Bitcoin, as well as house prices at record highs, is supportive for consumer spending.
Swetha, which stock should we think of being price insensitive? If prices go higher, consumers will continue to buy. Is it Hermes? Is it Ferrari? These are kind of the names, the obvious names, where actually tariffs aren't going to have an impact, in fact, could have the opposite effect.
Yeah, I'd be looking for companies which really cater to a very inelastic consumer segment, where the impact of a 10% higher price is not going to dissuade that consumer from purchasing that product. Ferrari certainly in that category. Even Ferrari at its quarterly conference call was somewhat circumspect about passing through price increases should tariffs be imposed. I suspect that's more of a customer goodwill gesture at this stage. And in reality, that company, more than perhaps any other in the consumer segment, has the ability to pass on higher prices because of its long wait lists and order books. Similarly, companies like Brunello Cucinelli, Hermes have that ability as well. I'd also put into this category companies that did not exploit pricing as a lever to drive growth in the last few years, because many companies in the luxury segment took the easy way out, increased prices by a lot. We all know the example of a Chanel bag that's today 60 to 70% higher for the same product than it was 3 to 4 years ago. And I think those companies will find it harder to put through incremental price increases when there's no incremental value being added.
I know, those price rises really hurt. Swetha, great to see you. Thanks very much indeed. Always fantastic to get your take on what is happening here. Swetha Ramachabdran, fund manager at Artemis. What are we going to talk about next? OPEC Plus delaying a meeting that was scheduled for this weekend, with producers seemingly kicking the can down the road on supply decisions. We're going to talk about that next. This is Bloomberg.
Welcome back to the opening trade. 45 minutes into a session that no doubt will be a little quieter than usual. It is Thanksgiving. Happy Thanksgiving if you're in the US, or if you're American and find yourself elsewhere. We have European stocks, though, making some gains in the meantime. Is this in sympathy with US tech, or is this in response to the US tech news? Certainly it's to do with chips, and it's to do with curbs being imposed on US tech names by the Biden administration. So we're keeping an eye on that sector. We're also watching what's going on with oil. It's been a busy time geopolitically, and oil prices have been responding in recent sessions. But let's talk about something else when it comes to oil. OPEC Plus has confirmed that Bloomberg's, the earlier Bloomberg story, that it has that it's delaying its meeting on oil production curbs to December the 5th. The discussions had originally been scheduled to start on Sunday, just this coming weekend. So let's get to Bloomberg's Middle East energy markets reporter, Anthony DePaola, who's with us this morning. Anthony, what can we read into this delay then, do you think?
Good morning, Anna, and yes, happy Thanksgiving. Yeah, it's a delay of this meeting, supposed to take place over the weekend on Sunday, delayed now to December 5th. OPEC Plus, OPEC itself is saying that this is delayed because some ministers will be attending a GCC meeting in Kuwait. Of course, those kind of summits are planned well in advance, as was this OPEC Plus meeting. But really what we've seen is some diplomacy behind the scenes in the OPEC Plus group taking place over these last couple of days. Bloomberg has reported that some of the members have already started discussing delaying that plan, and the idea is to delay the return of some of those barrels into next year, potentially even for more than just a month. So they've already delayed the return of some of those barrels a few times, and they're looking to do that again, simply because the market just isn't ready for those barrels. Plus, we've seen some trips by the Saudi energy minister and the Russian energy minister to some of the OPEC Plus allies. They were in Baghdad earlier this week, speaking with the Iraqi prime minister, and they had a call with the Kazakhs just yesterday. So these are some of the countries that have been known as the cheaters in the group, those that are producing over their quota. That issue with non-compliance with a quota is one of those things that OPEC Plus, particularly the Saudis, see as a negative, something that's weighting down the price, putting more oil in there. Of course, the Saudis are some of the biggest cutters. They want to get their oil back in there and not forgive it. An interesting thing as well, December 1st, December 2nd is the UAE National Day. The UAE is another one of those countries that has been said to be producing over quota as well. So we haven't seen a visit there yet, but potentially the UAE minister didn't want to travel a day before his National Day because there's a lot of events going on here. I'm in Dubai right now, and there are flags everywhere and lots of events for that National Day. So those are some of the issues. I think it's probably more that behind the scenes negotiation and those behind the scenes talks that OPEC thought they needed some more time. That's why we pushed this meeting. They pushed this meeting back to December 5th, Anna.
Anthony, does the world need more barrels of oil right now?
Yeah, Guy. Well, that's what they are struggling with, and the answer is no. There is already some lot of length in the oil market, some oversupply. And if we look forward to 2025, which is what the OPEC Plus group is doing, they are seeing a lot of oversupply. as demand comes in weaker than a lot of people had expected. And what we see is a lot of other oil coming from other countries outside of OPEC Plus. That is like the United States, like Brazil, like Guyana, Canada, for example. Those countries will continue putting barrels in the market. And the amount that's expected to come on from those countries outweighs the amount of demand growth that we're expecting to see next year. So that doesn't leave any room for OPEC Plus to bring oil barrels back into the market. And so that's really the conundrum that they're struggling with. They have got these more than 2 million barrels off the market that they want to bring back on. They're foregoing market share. The price is hovering now between 70, 75, which isn't terrible, but not what they want from their point of view. So they want to get that oil back on the market, but they don't want to forego a higher price. So they're really struggling with, what amount of oil do we want to put on the market and at what price? So that's really the issue. And the short answer to your question, Guy, is no, they don't need that oil right now.
Anthony DiPaolo walking us through the oil story, of course, as OPEC delays that meeting to about a week from today. We thank you so much for walking us through it. He's talking about the supply story, of course, some of that really kind of buffered and cushioned by the U.S. shale story as well. But on the other hand, you have the geopolitics in the region on both the war in Ukraine and the war between Israel and Hamas as well, both that could have the potential to move the oil story. I want to stick with that theme of defense and the geopolitics and, of course, the war zones in this part of the world. Countries in the Nordic region have long been among the most vocal about the threat of war on their doorstep. Now, Finland has set up a website showing people how to last 72 hours in the event of a crisis or conflict. And people in Sweden have been sent leaflets on preparing for war. Let's get more from Bloomberg's Nordic managing editor, Kati Poyanpalo, joining us this morning. Kati, why now?
Hi. So Russia's war in Ukraine has really brought it home to a lot of governments in Europe that war is not something that's in history books. It can happen here as well. And given the primary job of a government is to keep its people safe, they're wanting to prepare now. But war isn't the only scenario they're looking at. We've just been through a pandemic a few years ago globally. There's climate change bringing extreme weather events such as the recent floods in Spain. And we also saw an energy crisis 2 years ago. So there's a lot of different threats that governments want to be preparing for right now.
Yes, indeed. And we've seen the region where you are, Kati, we've seen a lot of re-evaluation of being members of NATO. And so this plays out at the geopolitical level. But on the ground, what's happening in the different countries, in particular in the region where you are, in terms of this preparedness?
So there's a lot going on. As we mentioned, Sweden sent leaflets last week to 5.2 million households in the country, all of them, giving them just basic information on what to do in various types of crises. Finland last week launched a website that includes all of these instructions. Lithuania is making way in stockpiling medicines as part of this bigger EU project to have 22 stockpiles of essential medications in 16 member nations. And in Denmark, for example, the financial sector is being prepared. They're looking at a scenario where if power went out for a week, how could you pay for your groceries? And they've come up with this system where your debit cards would still continue to work with the financial system and the retailers kind of taking the risk half-half. And then you've got places like Norway and Sweden as well who are thinking about restarting grain stockpiling. A lot of countries never stopped doing that, so a lot of countries in Europe still have those stockpiles. So a lot of efforts on various fronts.
So the question I'm sure everybody that is watching this right now is asking is what's on the list? If we look at Finland, what are they doing? Can we learn lessons from this? Walk us through some of the key things that are being put down in terms of what you should prepare for and what you need to prepare for these events.
So that depends a little bit on whether you are a government, you represent a company, or you're a private citizen. But if we talk about what anyone can do and have in their homes, it's just basic essentials that can help you last, even if you just get sick for 3 days and can't go to the store. It's good to have some food at home. What if, your water wasn't good? It's good to have some bottled water. There's a whole list of essential gear that Finland sort of set up on the website that you can go and check to see what you need. And one of the most common forgotten ones that people don't really think about is actually pet food. You want to be able to feed those furry animals as well.
All right, Kati Pohjanpalo, we thank you so much for walking us through it. She's, of course, the Bloomberg's Nordic managing editor. Plenty to keep an eye on in the hours ahead. We'll kick it off, of course, with, in just a couple of minutes, we are getting some of the German CPI data as well, the regional ones, the kind of overall one we get about at 1 p.m. UK time as well, and then plenty of ECB speak. Villeroy, Knott, and Lane all speaking. And, of course, over in the States, the stock market is closed and the bond market is closed, but futures very much alive and well.
Are you shopping? Is that something that we should also be thinking about?
Shopping for turkeys, shopping in general, shopping online.
Or dog food, maybe.
It's a day early for shopping, isn't it? Today's the eating, tomorrow's the shopping. Isn't
Correct.
that the simple way
Correct.
to remember how this American tradition plays out?
Correct. I will be eating. I will be shopping online tomorrow. I don't know what I'll be shopping for, but I kind of have a little bit of FOMO there. You know, when there's a sale and you're like, there's a sale, I have to buy something to take advantage of the moment. I don't know if you have this.
Believe me, no.
Is this just me?
When there's a sale, I'm like, why are they selling it? Why are they selling it more cheaply? Why doesn't anybody else want it?
That's kind of,
precisely.
This is American consumerism that's just completely lost in the UK.
I think it's certainly lost on me. But I suspect we are going to learn some useful things over the next 24, 48 hours as to the strength of the US consumer. The latest data has been super strong. Is that going to be borne out by the reality of the numbers we're going to be seeing? You don't see people piling through stores in the way that you once did.
Swetha was giving us quite a positive take, wasn't she, on the US consumer earlier on? So even if there's a bit of a stockpile of some of those spirits still left over from the pandemic, in other areas she was talking more positively about what people are going to go spending their money on. Maybe we should just check in on bond markets before we go, because
French bond markets.
We've been watching the French story really intensely, and it does seem as if we've got a little bit more stability in that French spread just today, really. That perhaps on the back of what we've been hearing from the French finance minister about maybe rethinking on the budget. 83 the spread right now.
So we got up to Greek levels. We backed off Greek levels. Are we going to go back to Greek levels or beyond, I think is the question.
We might. Basically, this volatility is coming off this radio interview that, to Anna's point, that the finance minister did, saying that there may be concessions on the table. They're eager to get that budget done. Still not showing up in the euro, though. Maybe the inflation data that we're getting in a couple. It just doesn't make any sense. The euro tracks the Haute-Boon spread, so this feels like a dislocation, at least according to history. We've talked a lot about it. We're all going to gear up. We're all going to look for those Black Friday sales. It does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.